Everybody, it is Friday, the 1st of May, 2020, and this is Brian Shannon from alphatrends.net speaking. We had a little bit of profit taking this week in the markets. The Russell 2000 were actually up 2.25%, but other markets did experience a little profit taking. The Biotechs, which have been strongest lately, did lose a little bit more ground. Still positive year to date, and the NASDAQ fractionally positive year to date. Let's take a look here at this daily chart to start out. We've got a rising 20-day moving average, a declining 50-day moving average, and a declining 200-day moving average. When we look at where this market actually found supply this week, it's pretty much right at the 61.8% retracement of the high this year to the low this year. So this rally came up to 61.8% and then began to pull back here. It did it mainly on the gap today. This chart here is a 30-minute time frame, and you can see I've got a volume weighted average price from the day it made the peak, which was 3 days ago. This is the week-to-date volume weighted average price. So we gapped below that, and this prior level, which had been resistance, 286 to 287, and then support in here, we'll now be looking for that to become resistance, or if it becomes resistance, I should say, then we will be looking for lower prices to come. So if it rallies up towards 286, 287 next week, be aware the 5-day moving average will be declining, and most likely that will mean that we need to consolidate a little bit further price-wise. So far, this market has held up very well. The key levels that I'll be looking at as far as potential buyers, the volume weighted average price from the 1st of April, right down in here, that kind of ties together with what has been a little bit of support in this 272 level. So that's possible that we could head down towards that next week. Keep an eye on that. As far as the NASDAQ goes, we are a little bit better shape, but still below the declining 5-day moving average tells us we need to be cautious. If we see further weakness, then this will be our first level of potential bounce, and maybe it would unfold something like this where it drops down, makes a lower high, and then comes down to this level right here, which is from the 1st of April. And this has also been an important level as far as prior supply and then demand in here, or supply meaning resistance, demand meaning support. Will it become support again? We don't know, but it will become a level of interest if it does head down towards there. As I mentioned, the Russell 2000 was positive this week, but it's still a pretty ugly looking chart, relatively speaking. I mean, we do have this higher highs and higher lows pattern. That won't be interrupted till 115, but to get down to 115 is still a hell of a decline from here if you're holding on long. This is the level that I was talking about as far as the Russell 2000 being able to maybe show some outperformance if it got beyond it. It did do that. We traded this at Alpha Trends. We got out early. I didn't trust it with that declining 50-day moving average. I should have stayed in longer, but you know what? Hindsight is always perfect. You can't go broke taking profits, and if I had stayed in, I would have basically been at a break even. So I'm looking for this market to try to settle down. If it breaks below this 120-ish level, then we might have to start looking at the potential of the volume weighted average price from the low, which would be down near that 115 level. Semiconductors did pull back some. Here's what I'd sketched in my midday video for subscribers, saying maybe we see it rally up towards this level. It didn't do that. Instead, it broke right through this prior band, little area of support, showing that it was a potential level to bounce from, but it didn't do so. Instead, we're below the declining 5-day moving average. I think that 133 to 134 is going to be the key level that has the potential to turn this market lower next week. So if we see rallies up towards that 133, 134 level, be on the lookout for a potential failure in that area. And if it does fail, well, what are some of the key levels to look out for below? Again, the volume weighted average price from the beginning of April, you can see we're right on that. So let's go over to a 130-minute time frame. There's a 5, 10, and 20-day moving average. But if we take a look at the volume weighted average price from the low in March, you can see that's at about 123, and that certainly looks reasonable. It's also, of course, what we 123 to 123, 123 to 124 is has been an important level previously, so it would make sense to see that potential level get tested once again. The semiconductors have been the leaders, so when the leaders start to fail a little bit, be aware of that. I wanted to go back to the SPY for a moment because I failed to point out that we had also closed pretty much right on the year-to-date volume-weighted average price. The average price paid for the SPY is basically right here, meaning it's kind of a toss-up as far as where people are positioned from the beginning of this year. Biotechs have been the stronger group. They had broken this resistance. I had warned several times that you don't want to chase breakouts when they are extended like this. We've had a hell of a rally from 93 up to 128, and now we're starting to see some of those gains digested. They did break down through the lower end of what had been a level of consolidation, that is with the band of support down near 122 and resistance up near 128. That whole area being what was acting like a consolidation through time. Now we've got a price correction. I think that rallies up towards 24. Look for the potential of them breaking down and then perhaps some further profit taking in the biotechs. They are due for a little bit more of a rest, I think. So just as always, just don't chase things. People are in the habit of chasing things and looking for them to break out and that sort of thing. You have to ask, what kind of environment are we actually in, and where has the market come from? So when the financials rally up to this prior peak, look at how they got there. They rallied from 2150 to 2350. Now we're pulling back. We're back below the volume weighted average price from this peak. This is where actually, once it broke beyond that, this is where I started having a bullish bias. I did not trade them, however, because I'd never found a low risk entry into it. I'd rather miss the trade than chase it. And for people who chased it, maybe they're getting stopped out in here or puking their positions. Over to the daily time frame, we ran right up into that band of resistance, and now we've got this trend line that we can look at off of those lows, and maybe a trend line should be drawn to show the essence of trend, not necessarily a completely straight edge. So this really represents essence of trend more than anything for these financials. And I wouldn't say short below that level, but if you're looking for a short side trade, look for the financials to rally, and then as they begin to decline, then you want to short them. You don't want to short them into the strength, but you want to short them after a period of strength rolls over and then begins to decline. We've got a lot of volatility and still earnings coming up for this market. So as always, I'll leave you with a reminder that I do this type of analysis every single day for subscribers to alphatrends.net. Come take a 2-week trial and you'll see that I provide timely stock trading ideas every single day as well. Have a good weekend. Thank you.